Back in the saddle again, checking in on some more risk relief. Looking to increase our buying power, maybe a little bit more. If possible, we want to do that in the profit, in the money, if at all possible. So let's see where we stand here. We know we're leaving these calls, all of these calls on the table. The Devon puts, those are in the money. So we'll deal with those either late this week or next week. Leaving the call on Ford, and this is our second position on Coke. Leaving the AT&T, currently AT&T, this is a 1950 call. So it's in the money right now. Now that, did you say now twice in a row? I did, but that's all right. That's all right, mama. Let's open a new Seeking Alpha page just to see. So I think AT&T, didn't they go ex-dividend, was it last week? I think it was last week. Let's find out. So if we look at the AT and the T year to date, high of the year around 2042, currently at 1979. Got some mixed reviews here. Whoa. The analysis, we've got 3 sells in a row there on the Seeking Alpha analysts. Let's look at the dividends though. I think they just went ex-dividend date. Yes, on April 6th. So I've got that locked in, locked and loaded. 28 cents a share. And what do we have? How many contracts is that? 10? Yeah, so that's 1,000 shares. Got our dividend locked in. And what's our cost basis? It's pretty good. I think it's under 1850. Yep, it's at 1825 as our cost basis. We've collected some nice dividends. We'll collect the next round of dividends, and then also could have that share appreciation between 1825 and 1950 on 1,000 shares. So as much as I like AT&T, I'd be prepared to reset that position. What I was looking at is this. It is the Vanguard Dividend Appreciation Fund, currently at 155.35. We have a call, 3 calls, in fact, at 159. We originally collected $300 for that position, and I was wondering, what can we close that for? Because I'm considering selling the 300 shares of Vanguard Dividend Appreciation because I don't need a fund that charges me a management fee. Now, a year ago, whatever, I paid these tiny management fees to Vanguard because I didn't manage any of this stuff. I had all of my money into VTSAX. I shouldn't say all my money, all my brokerage money, all my stock money, all my dividend money. Whereas the majority of my money, of course, is in real estate, I've told you. But this money was in Vanguard. I've moved some of it over to Robinhood in order to trade these stock options. But I can look at, so if we go to Yahoo Finance, look at VIG, who are the top holdings of this ETF? Where is it? Okay, so right here, we click on the tab Holdings. We'll be able to see who the top holdings are, and then we can replicate that on our own and then sell options with higher premiums. So you see a bunch of companies we like, definitely inside of the ETF, but it also charges, if we go back to summary, they charge 0.08% expense ratio, which is very low, but still it is an expense ratio. So I might try to get out of this position, buy to close these calls, and then I may just turn around and sell the 300 shares immediately, put that cash in my pocket, and then wait for opportunities on individual stocks that we like to trade options on and or collect dividends. So is it possible to fill at 15 per? So that would cost $45, right? For the 3 contracts that we originally collected $300 on. So we'd still be sitting on a nice net profit. Buy to close. Don't know if there's going to be enough interest to do that at that number, but we'll leave it on the board for the moment and then head back to the big board. What else is on here that can possibly be taken off? Speaking of taken off, I took off those call credit spreads earlier on the SPY. SPY is still threatening a bit. I mean, it keeps threatening up, as you see. Higher highs and lower lows is never a good sign when you're sitting on a bunch of call credit spreads. And that number was 413. I was at 413 and 415, so it was $200 wide on 15 contracts. So it's $3,000 in collateral, but we closed those out in the profit, so I was happy to do so. Give me some more peace of mind in that regard. So what else do we have that can possibly be closed? This ExxonMobil put is at April 21st. It's only 40% in the profit, but, well, 41% as we speak. That would take $11,200 off the table. And it is a profit. A profit is a profit, right? Let's just see what the bid and ask is. It's not bad. It's pretty tight. Toit like a toiga. And ExxonMobil is up today, so that's helping our position. It would cost us approximately $63 on our $108 that we just put on yesterday. So that return would still be pretty nice. Can it close at 63? Let's see if we can buy it closed at $63 just for fun. Take a little bit more risk off the table. And if we do, what would be our number? So if we do 108, $108 minus 63, that'd be, well, that's not proper math. $108 minus 63. That'd be a $45 profit, but it would be in one day, right? But let's just call it 2 days for fun, because otherwise I think it'd be too much of a crazy number, wouldn't it? Let's find out. So divided by 11,200, that's a minuscule return, right? But if we divide it by 2 days, looks like it filled at the 63. And then we multiply it by the annualized of 365, then we'd be at a 73.3% return. And that looks like it's going to be our number because we just put that trade on yesterday on ExxonMobil, April 10th, for $108 in premium, and then we just bought it back for 63. I know it's kind of like a bonk, bonk, bonk. You're kind of a chicken, Bart. But that's okay. It's profit. It is profit. It releases the collateral, increases our buying power, which we enjoy. And just in case tomorrow goes awry and there's some super put opportunities, which I'm not saying they are, there's going to be, the market could skyrocket tomorrow. And then all of these puts that I closed today would have all been in the super profit. But that's all right. That's all right, mama. That's okay with me. That pending order is still on the board on the Vanguard. Same with these Verizon calls, currently at $40. And what's Verizon at? It's knocking on the strike price's door. That's okay. If you want to come and get Verizon, come and get it. Come and get it. I'll put the profit in my pocket and live to trade another day. Did we already trade that AbbVie? I think we rolled it just last week, right? Is this a roll credit? Yeah. That's a rolling rawhide. And AbbVie currently at 162.11, but this doesn't expire until the end of April. We'll probably leave that on the board for now. Let's keep looking. I thought I saw something else on here I was interested in. Altria Group, Big Mo, leave that up there. Amazon, it's only at 10% profit, but it is $100 bills. Costco, that was the one, the Costco. I was looking at that. Even though it's all the way out to May 5th, it's almost at 60% profit, but the bid ask Where is it? Is it pretty wide? It's a little bit wide. It's a little bit wide, but look at what Costco's doing all the way up to $500, just under $500. I wouldn't mind. I wouldn't mind pulling off the risk. We did collect $500, right? We collected $500. It's going to cost us approximately $209. Can we get it for 206? If we were able to close that at 206 and release $46,500 in collateral, is that something that can fill as we speak? Could be. Let's look at the Costco closely. Take a look at Costco Wholesale Corporation. We used to have a membership there for a few years, but it's about, Maryville is close to us in geography, but it is on a very busy road, Route 30. So it takes a lot of time. To get there. Not sure why my computer is making so much noise right now. Hopefully it's not coming through on your end. It is a MacBook. They're typically noiseless, typically make no noise, but right now the internal fan is going, probably because of this microphone, this Mr. Microphone that I have hooked directly to it. So if we look at the 1 day, it is going up and up and up, 5 day. So we were around here, weren't we? We got in on this put after it took this Geronimo smash down here, and then it's made its way back up, just exactly what we wanted it to do. And it looks like it has filled. There we go. So we have collected a profit of what? And that was April 6th. That was 5 days ago. We had $500 in premium, and then we just paid $206 to get out of the trade. $294 in net profit divided by 46,500 equals this equation divided by the number of days, which is 5 days. And then we do the fancy math, multiply it by 365 days to get an annualized return on capital, 46.1% on that Costco put option trade. So we will take that and release another $46,500 in collateral. So let's take a look. Let's take a look at it now. Let's take a look at where we stand as far as our buy-in power is concerned. 2.357, so $2.35 million bills. Is that it? Let's keep looking. Got this 110 ExxonMobil on May 12th, but that one's in a good position. In fact, what's Exxon doing today? X to the O to the M. ExxonMobil is currently at 115.79, up 1.1% today. If we look at the 5 day, look at that Chapa and Chapa broccoli. So the trade is in our favor right now, but we'll let that mature. A bit. And we'll shut it down for now just to figure out why my computer's fan is aggressively spinning right now. And I may or may not come back today. We'll look at this. Hopefully this fills. If not, I may adjust that and spend another penny per contract to close it out. If so, I will definitely let you know either later today or tomorrow. See you in the next video.